So it's headlines versus fundamentals. The former right now crushing the market. So how do investors navigate this new emotional wave in the market? Want to bring back to discuss Shah Gilani and David Nelson. Shah, you know, for me, it's pretty simple. Earnings are phenomenal. Growth is here. Valuations have come down. They're more reasonable. It seems that people should be very cool and not panic, and yet the downsides have been pretty swift lately. How are you telling people to navigate the market?
Well, I've been cautious here, Charles, because the market has been acting so skittish. The volatility is 50% higher than it was pre-January levels, so that kind of makes everybody nervous, certainly myself included. The markets have been trying to struggle back from the February sell-off. That was precipitated by better than expected wage growth, and all of a sudden the fears of inflation, the fears of Fed rate hikes, et cetera, so the market sold off there. We started to really bounce back nicely, where some of the stocks, the tech leadership stocks, are making new highs. So that's all well and good. The broad market may be not doing quite as well. But now all of a sudden we've got the prospect of trade wars and the market's skittish yet again. We still have interest rate hikes ahead. So the market, I think, is going to be a little dicey in here. I'm telling clients just to be careful, cautious, have your stops in.
Have you raised money? Have you increased your cash position?
Oh, I've been sitting in a ton of cash. I have very few positions on right now. I was expecting the market to again test its lows. I'm not so sure it's going to do that anymore. But I'm ready. That they're willing. If we make new highs, if we get back up to new highs, I'm going to start allocating a ton more cash. I think we've got another leg higher. But we're not there yet.
Okay, David. I understand we're in this 2,000-point trading range in the Dow. It's really tough. As we approach resistance, I'm saying it looks like to me 25,700. We back off for any number of reasons, but people obviously are selling, and we see them sell into these periods, and you kind of feel like, golly, I wish you didn't do that. And sometimes it's a week later, even if it's months later. How do you help people hang on through these periods?
If you get out of the market, and let's say you get out right at the top, that's great. But what's going to be your trigger to get back in? That's the question you got to ask yourself. And I doubt down 10% is going to be that trigger. You're going to say to yourself, oh, my God, this is the beginning of the end. I'm not going to get back in. You're probably not going to get back in until another all-time high, and it's a self-defeating prophecy. I get the fact that we're in this like kind of vicious news cycle, and the tape seems to be ruling everything. The bots are reading everything. Today, computers read the news just like you and I, and they make a decision and then they sell, and you get that intraday volatility. So for me, the fundamentals haven't changed, and until they do, I've got to stay long. And
so you're mostly long then. You don't have.
I am in the same position I was 6 months ago. I'm full boat in, and I haven't seen anything to change that.
So Shah, when do you start buying, and what areas are you looking at? I mean, tech, to your point, has already resumed its move higher. So if people are trying to pick a bottom there, they might have missed it.
Well, I have a simple philosophy. I put my stops in. If I get stopped out and the market goes down, I'm looking to get in lower because I'm not sitting in cash. If I miss that, and I did miss the 10%, where I got out of a bunch of stuff, actually most of my positions, some of the tech stocks I didn't really want to get out of, but I got my stops. I got to stick with my discipline. I have a simple philosophy. If the market comes back up, even whether I'm prepared or not, I buy in at the price I got out or $1 higher. It's just that simple for me because I'm not going to miss it. I'm very lucky to get back into Microsoft, Amazon. I got back into all the tech stocks I wanted to get back in. The broad market, I'm still sitting on. There's a lot of bargains I see a little bit lower, but I'm not sure we're going to get to the next leg up just yet.
Right. Okay. And the next catalyst, beyond the headlines, beyond the speculation, is there something, because it always gets a little anticlimactic after the jobs report?
Yeah, and I think the next catalyst is clearly the Fed. That's going to be next week. We'll have to listen to the commentary. Everybody's got rattled. Everybody thought we were looking at 4% hikes this year. I don't see any way they can do that. The long end of the curve is telling us that isn't going to happen. Guys,
we have breaking news. The Senate just now approving that bill, that bipartisan bill, to undo portions of Dodd-Frank. It's a major deal. It was 67-31. It goes on to the House. Shah, this will unlock banking for community banks in particular, which are the majority of banks out there. They've all kind of frozen. Many of them, we hadn't seen any new charters since 2010. Most of them have stopped lending because they were afraid to go over $10 billion in assets. What could this mean if we can unlock these banks to start lending money to Main Street again?
Well, the big banks aren't as, they're not as bountiful as they used to be in terms of lending. It's the community banks that do most of the lending. They've been hamstrung by Dodd-Frank, so this is really long overdue. They never should have been burdened as much as they were with Dodd-Frank. This is a positive for local economy. This is a positive for job growth. This is a positive for entrepreneurs, for builders. This is good for local economies. This is good for the economy in general.
Yeah, even Barney Frank admitted that this shouldn't have trickled down to hammer community banks the way that it has.
It's the unfortunate what happens after a financial crisis. The pendulum tends to swing too far. I think even Barney realized that. They're the mainstay of the economy and too big to fail. The big banks just kept getting bigger. They're $9 trillion in assets
David, we
right
couple
now.
this with that amazing optimism survey from small businesses yesterday. Is this the kind of thing that can move the GDP?
It certainly helps it. It certainly helps it along. I think it's exactly what you want to hear because in Billings, Montana, that's not where J.P. Morgan's going to end up.
Absolutely. They've been closing a lot of branches. Thank you both very, very much.